Hi traders, this is Brad Gilbert with the Daily Market Insight for Monday, the 23rd of October. All right, now, if there's any news, the yen touching 150 again, but the yields are dictating trading, right? And it's very obvious, but there's a little twist to it as well because, you know what, the US yields continue to climb. I'll just get that up. But I'm not seeing the same vigorous moves here. What happened there? Okay. I'm just trying to locate that pen where that turned up to. All right, so US yields, okay, still banging away to the top side, right? They've got to be like, I know it was 16-year highs like a week ago, so we're just hitting new levels here. Now, that seriously should give the US dollar some traction, and it generally is. The Aussie is the one currency in the CAD sort of bucking the trend here. Euro, sterling, Aussie sort of drifting, but this is the thing. Right, I think the market's confused. Like, there's so much positive information and economics and factors, and the Fed raising rates. Everything's factored into the US, into the market, right? This is where it's going to get like interesting from here, because we are not seeing the dollar. It's not going up, right? It's not going up anymore. So what that tells me is, generally speaking, and we used to think of this when we're in the banks, like, everything's good. Why isn't it going up? Well, that generally tells you that the whole market is long. The whole market is already positioned, and they're sitting there thinking, well, everything should be going up here because the US yields are going up, you know, if you follow the same theory, but we're not getting that, okay? In fact, we're seeing a little bit of dollar weakness across the board. Sterling, well, it's sort of struggling away with its own issues at the moment. Aussie's battling away there as well, as is the Kiwi. It's heading lower, and dollar CAD, well, it's caught between a rock and a hard place. Ever since the disruption in the Middle East, okay, things have been a little bit off center. US yields have been going up. The dollar hasn't really kicked into gear. We saw those inflation numbers like 0.1% better, and the dollar kicks into gear. The market has been massively positioned for a dollar sell-off, but we just haven't had the catalyst. And it tells me, like, even if we get strong US dollar news now, I don't think we're going to see much more to the top side. Dollar yen is obviously interesting, right? I don't think they can intervene whilst the dollar is strong at the moment. But this is where it gets, as I said, it gets a little bit kooky, is because those US yields are so high. Okay, over here, all right, the prices are falling, which means the yields are going up. It's a bit of a hard one, but if the market's completely long dollars, well, I tell you what, this would be a great opportunity for the BOJ to intervene and get bang for their buck. You'd see it down at 140 in a heartbeat, right? That's like 10 big figures. And I've seen it do 20 in a couple of hours. So don't think it's out of reach. What we need to do here is, in this situation, is understand that the market is stalling with all this positive US dollar scenario, right? And then you start to factor in what's coming out this week, and that's where we can start to really piece together where we should be really focusing on the next best trading opportunity, right? So if I just come over here to the calendar, and I've just highlighted the really high impacting numbers, okay? You got the Tuesday, okay? The action's really in Europe. Wednesday, Aussie inflation numbers and the IFO business numbers. And then this is where the week really kicks into gear. Thursday, we've got the Bank of Canada Monetary Policy Report. We've got the Fed Chairman Powell speaking, the ECB interest rate, US durable goods and GDP, and then the ECB press conference, right? Thursday is your go-to. And that's for directional opportunities. And it doesn't mean we're trading each of these events, but we're seeing what the impact is and going from there. And then you come into Friday, the core PCE price index, a really big inflation number that the Fed looks at very closely, and then personal income on Friday. So, like, what does that do for me? Well, I know what's going on, right? And this is where you should be confident with yourself, saying, okay, I see the bonds going up, dollar's not really going up as well. Market looks flooded with dollars. Anything here from Jerome Powell, the durable goods, and the GDP. But alongside that, if we see something really positive out of the ECB interest rate decision, which is a bit of a stretch, I'm not seeing any positive stuff out of Europe at the moment. If we see that, this may be the straw that breaks the camel's back, and we may see the dollar tumble. As I said, unless there's some bizarre thing, and it's not the interest of the US to have a strong dollar or a stronger dollar than what it is, I can't see the dollar going up even if these things are strong, right? So what I'll be looking for is, as we come in closer to these numbers, is looking for opportunities for any weakness here, especially the numbers themselves, right? Trading around Jerome Powell's speech is a little bit problematic because he, could be talking positive, could be talking negative. It's a bit ambiguous, but the numbers, right? The numbers are the key to it. And these are all pretty good, you'd say at certain times, top tier numbers, definitely secondary sort of primary numbers there that could give us something to look at, right? So to me, I'm looking for dollar, like a dollar turnaround. It's not going to happen unless we get something serious or just weak numbers. Jerome Powell could do it himself. But so if you're thinking that, and you're thinking of the dollar, right, you're looking at these markets and going, well, yeah, Brad's telling us this. The US yields are going up. Okay, equities at the moment, start the week, are going up. There's no risk on profile. Okay, but the equity market's having a good run, right? That would sort of tell you that maybe the Fed aren't raising rates, but the bond yields don't suggest that. So there's a bit of a mismatch. We need to wait for the market to settle down, and then we can start to poke holes in it, looking for opportunities to get into a trade. Now, there's one or two things you can do, right? The dollar is sort of neutralizing everything, right? Well, what you can do is focus on other instruments where there is data. Euro, right? There's a bunch of European data releases coming out this week. Aussie inflation as well. Take the dollar out and look at the crosses. Euro crosses, Aussie crosses, and any other crosses that you might think or you think might come up as well, right? If we see a major event, you'll see the yields dump pretty quickly. The dollar will fall, equity markets will rally, and Euro, Sterling, Aussie, Kiwi will rally. And that's what we're looking for, right? So just take it easy to start with. I mean, things are sort of moving around a little bit, but there's general confusion and a mismatch of the fundamentals. And that's what you need to know going into the start of this week. All right, guys, all the best. Good luck. Cheerio.